and gentlemen, welcome to Market Today, your best show on how to trade and invest profitably in markets at Business Today Television. I'm your host Shail Bhatnagar, and we kick off yet another week as far as Indian equities are concerned. 7th of October has a lot of resonance not only in the equity markets but also it marks the first year anniversary of the terrorist attacks that Hamas inflicted on Israel, and of course the aftermath which is still resounding across the world in equities as well as in geopolitical moves. Let's look at the Nifty. Remember, last week was very painful. Correction came sharply and it came very swiftly. You have the daily chart of the Nifty as usual in front of you. The index has lost about 4% all of last week, and of course you have the move that is coming in on a weekly basis. I have put in both indices for you. One is of course the daily Nifty, which you see on a very regular basis, and that is an index which lost for 5 consecutive sessions, lost about 1150 points from an all-time high of 26,280 and rested on its 50-day exponential moving average. As far as prices were concerned, it sort of managed to hold on to the 50-day exponential moving average as also to the very crucial 25,000 point mark. The weekly picture was a lot bothersome. After 3 successful weeks of gains from the close of 2nd of September, the market, as I have told you early, peaked at 26,270, and last week the index on its weekly charts fell below the 10-day exponential moving average. This is how the Nifty is positioned, and the main reason was the very high geopolitical tensions between Israel and Iraq. Everybody is waiting with bated breath for Israel to respond to Iran's barrage of about 180 to 200 cruise missiles, ballistic missiles that it had fired on last Tuesday. Nothing much has come out of it, but the tensions across the world are high. Crude oil prices, I will also have that chart shown to you, ladies and gentlemen, rose 8.6% on a weekly basis beyond $74 a barrel. They are knocking at 200-day DMA, and this 8.4% uptick because of geopolitical tensions was the highest in 1 year. Remember, rising crude oil prices are a negative for Indian equities, which were already suffering from record high valuations, and that was the reason why the trigger came in form of selling pressure. Now let us look at the Nifty Bank. Situation on the Nifty Bank is worse than that of the Nifty. The weekly chart shows Nifty Bank around the 21-week exponential moving average of around 51,200, 51,300. Remember, the index lost somewhere like 2,300 points last week, and overall it is down about 3,000 points from its all-time high that was seen on 26th of September. Now these are the negatives that we are grappling with, and they are visible in the very heavy net foreign institutional selling that you saw all of last 5 trading sessions. A total of negative net 37,000 crore rupees have been withdrawn by foreign institutional investors, and a large chunk of that money has gone into underperforming Chinese markets, which somehow triggered a very sharp rally from 19th of September onwards, when there was a cut in interest rates as far as Wall Street is concerned. Now what will happen this week, ladies and gentlemen? This was a slightly extended background note that I provided you. This week the market is likely to consolidate, although it's far too early to say whether the worst is over, but it does seem that the first round of selling pressure might just stabilize and the index might consolidate at current levels of 25,000. We have a series of major events lined up this week. Let me start with Tuesday, which is the day when the results for the elections held in Haryana and JK will be known, as also Maharashtra a little later. But remember, the ruling BJP at the center is at the back foot, especially in neighboring Haryana, where the Congress is supposed to get a working majority as far as the 90-seat Vidhan Sabha is concerned. In JK, of course, it's the Congress plus a National Conference combined, which is likely to inch ahead as far as state elections in the northern state are concerned. So that's well, not at all a positive that the markets are looking forward to, but those are numbers and we must appreciate that. On Thursday, you will have the RBI credit policy on October 9th. My apologies. October 9th will be Wednesday. Rates are likely to remain same as far as interest rates are concerned, but RBI's commentary on inflation, as also the move by the US Federal Reserve and its implications for the world, will be sought after. The MPC has already begun its 3-day meeting as far as the positioning on rate increases or rate cuts are concerned. Quarterly earnings begin this week. Starting Thursday, you have TCS, Tata Consultancy Services, India's largest software company, declaring its second quarter earnings for the market. So keep an eye out on that one. And also 4 updates, business updates have come in, respectively from Titan, India's biggest and largest listed jewelry maker. Sales for the quarter are up 25% year on year. Jewelry sales by volume have accelerated to 26%. That's very, very positive. IndusInd Bank, a private sector bank from the Hinduja stable, has shown a 15% rise in deposits and a 13% rise in credit disbursals. Federal Bank has shown an increase of 15% in deposits, and Bandhan Bank a 27% surge in fixed deposits. So these are all good for all these private banks which have been grappling with issues in relation to how deposits are moving away into the stock market versus the banking sector. Tata Steel, I have just one number, which is the delivery volumes, which have risen, of course, by 15%. So these are 5 or 6 stocks and the broad thrust that I am seeing. Most probably, as the GIFT Nifty suggests, the risk on trade is back. You'll have a 50-70 point gap up, but is that gap up sustained? Only time will tell, but let us get it straight from the horse's mouth. Joining us on the show is Mr. Dharmesh Kant, Head of Equity Research at Cholamandalam Securities. Namaste Dharmesh ji, a very warm welcome to you, sir, and festive greetings for Navaratri. I think you're joining after a month or so. The sentiment on the Lal Street has turned dramatically in favor of bears. You have always advocated sensible buying and not chasing momentum. Tell us, how do you see sentiment for this week? Is the worst over, or are we most likely to see more pain ahead?
नमस्ते शाह जी, नवरात्रि की आपको और सभी दर्शकों को हार्दिक शुभकामनाएं. I mean, last 3 weeks have been quite volatile for the markets. So both on the way up, we crossed 26,000 and then we corrected back to 25,000. And that is likely to be a scenario at these higher levels. I think we are now again setting in for our trading upper with regards to Q2 earnings update, as market will go in for a build up to quarterly updates by the companies, and secondly, the all important US elections are also around the corner, and then there's a sentimental Diwali on the first week of November. So these things will keep the momentum up. There was aggressive selling by the FIIs, but that was more to do with I think a hot money getting out of some profit being taken off the table, and that was seen even in Europe. It was not only India, Europe and other Asian indices were also equally down, like Seoul and all. Benefiting from this was Hang Seng and the Chinese index. As far as the earnings are concerned, I am not very bullish on the earnings for Q2 as well. I think like Q1, Q2 would also be a dampener. At best, it can be 6-7% kind of earnings growth. Having said that, you are setting in for a trading run-up.
Chaliye, that's the view coming in as far as quarterly earnings are concerned. Dharmesh, the entire how should I say, the equity structure into investing seems to have been shaken dramatically, and perhaps this is the first time that a lot of investors who have come in post COVID in the last 2 or 3 years are seeing what a true correction looks like. Are you worried by this rapid pace of fall? The decline, the angle of the decline is very steep. 3,000 points lost in 5 sessions as far as Bank Nifty is concerned, 1,200 points lost on the Nifty. What to speak of mid cap and small caps? Is this a turning point for the market?
I don't think so, Shailji. If you look at last 1 year, I mean, starting from just prior to the three state elections last year till this time, there have been 7 occasions when the corrections have been really sharp. And every time it looked like this correction is going to, take the market or change the course of the market, but the market has bounced back immediately. I think for next 1 month, one should not be quite worried. I would be really worried on this market if Nifty trades below 24,000. So that is 1,000 points still away from where we are standing. Eventually, my own sense is not now. I am going in with a trading play, but post Diwali, I mean from say 10th of November to 15th of December is the time where one needs to be cautious and at the same time be ready with your bag for cherry picking. That time market will give you a good opportunity.
Dharmeshi, we will be grappling with the election results on Tuesday, and it is more or less certain that BJP will lose ground in BJP in Haryana, where the Congress is likely to make a government, and in of course J&K, which is a little less relevant in the markets. It is the Congress plus NC combined which will make the state government. Do you think equity strategists such as you and maybe foreign institutional investors will be worried with the back foot that the BJP seems to be on?
Not really, Shailji. I mean, elections come and go. Even Maharashtra election, the all critical election would be due in a month's time. So there also we have to see whether how the result goes. But I don't think elections matter because if you look at the market from 2004 to 14 and then from 14 to 24, the Nifty index CAGR, I mean, I'm talking just about the index, has been the same. It has been 13-14%. So those 10 years saw a coalition government with all parties pulling each other's legs. Still, Nifty delivered a 14% kind of an CAGR, and their last 10 years has been a rock solid one party government as a single policy design. And again, the 14% CAGR is there on the Nifty index. So that doesn't change the needle. But in between, slight volatility can be there. So I don't think, and we are now into a matured economy with matured politicians. So your dramatic shift in policy, course changing policy decisions won't be there. I don't think so. That is the scenario going forward. So elections won't matter to the market. What is very critical to the market, to my mind, is the earnings update for quarter 2, on which I am not having a high hopes. So that is where my entire focus is.
Okay. The reason why I wanted to emphasize, take your views on elections is that in the time frame that you mentioned, 2014 to 2023 at least, the ruling Bharatiya Janata Party at the center was on a roll as far as state elections were concerned. But this is time and tide. Such things happen. Maybe the markets are looking for a time correction or a price correction, and they are looking at elections to maybe trigger that. Only time will tell. But of course, it's a very important development up north that the BJP is going to vacate Haryana, and the Congress is going to gain ground there. Nevertheless, let's look at the other part of the market. Dharmesh, this very sharp withdrawal of 40,000 odd crore rupees by foreign institutional investors at a time when domestics have also put in 37,000 crore rupees. Are you worried?
No, not really, Shailji. I mean, there has been in last 10 years, two calendar year when FIAs were net sellers in the market. Overall, still the market was in a positive territory. So this withdrawal can, I mean, already we have seen 4.5% kind of a correction. And if you look at the net differential, it is only 8,000 crores, 8,000 crores, because whatever they have sold has been bought by the DIAs. What has been the trigger for this correction, the balancing part was from the HNI decks, where again, hot trading money was taken off the table. And most of these HNIs are now active internationally as well through the ETF route. So China was spread, I mean, 31%, the index is up in last 2, 3 weeks. So that's a huge run up, and that has become the best performing index in the world as of now. So to my mind, even that trade is settled now. All these things have happened. Now we will be back to fundamentals, and fundamentals are again, as we are kicking off the earnings season of, I will 10th is date on TCS will be reporting earnings. So the focus will shift there. Nonetheless, I mean, as you have highlighted already, state elections and these things do play out on the trading mindset in the near term, and it can create a volatility and a negative sentiment. So that I am worried about, but I think the domestic liquidity flows, SIPs and all, the queries which we get from our clients was where to put in money in this correction. So people are sitting on money, domestic, I mean individuals and the SIPs. So that would do the balancing act.
Fair point. That's a very well explained thought. Now comes the most crucial part of the conversation, Dharmeshji. You are not very hopeful about the second quarterly earnings that are upon us from Thursday. The back end sentiment, of course, is in troublesome zone. So, where are you deploying fresh money, or are you just on cash?
I mean, on cash, that is what we have been recommending to our clients, and we missed the rally. I mean, from 24 to 26 when the market went up. So we were hardly any participant. But Shanji, I will point to looking at the portfolios. I mean, people are holding 25, 20 stock kind of a portfolio sizable. They did not make money in that run up from 24 to 26,000 when the index had a run up. So there were few select stocks which were doing well, but largely it was more of a negative to a neutral portfolio, and that was the cause of worry. As far as putting or being aggressive on the market, I think the only pocket where you can go aggressive as of now is the metals. So that is for the brave ones. It's a very volatile sector. I truly understand that. But the way things are happening on the global economy, I mean, India on a macro level is well settled. US is doing fairly well. We have seen the unemployment data and all. And in this push and pull, they also got a 50 basis point kind of a rate cut to fuel the economy further. China is taking measures, and we are hearing that again this week a few more measures will be announced. So this will sentimentally push the metal prices up. We have already seen a huge run up in the metal prices in the international market. And India infra standing remains where it is. I mean, this is a season from September, October till March, April next year. You would be seeing the infra activity happening. So metal is one place which is a go-to sector.
Okay, fair point. Metals, as you've mentioned, is your favorite space. What looks good? Aluminium. I meant companies, of course. Aluminium companies like Nalco and Hindalco already at record highs. Beaten down stocks like maybe Hind Copper, maybe Hindustan Zinc, where you have a silver play. What would be Cholamandalam's best foot forward in the metal space, sir?
Shelly, I mean, the best foot forward would be to go with a basket, so you are equally hedged. And in that basket, I think Hindalco, Hindustan Zinc, Hind Copper, Jindal Steel and Power, they're all find a space. What I would avoid is Tata Steel only specifically,
Okay.
because of its European exposure. But domestic centric market
Okay.
and Hindalco also play on US. So these are the, I mean, favorite play out there. They may be at record highs, I mean, but still there's a scope of, I mean, 20-25% upside for all these companies.
Okay, I think this avoidance of Tata Steel is a wonderful thought that you've put across. You see how record highs are being hit on the second and third listed players in steel, JSW Steel and of course Jindal Steel and Power. But what is keeping quiet or not moving much is Tata Steel, mainly because of its European operations, which are a drain on the balance sheet. Dharmesh, please allow me maybe 20-30 seconds. The pre-open is upon us. Let me just mark prices and I'll come back to you. Okay, ladies and gentlemen, it's a 38-point uptick as far as the market is concerned. Remember, we are now in the in the week when you have three major events. One, election results for Haryana and J&K tomorrow, the RBI credit policy on October 7th, and of course earnings starting with TCS from Thursday onwards. Let's start the conversation with TCS. 22.7 rupees higher, 4275. Okay, you have a green tick on Tata Motors, 2% higher, 1865 rupees higher, 949.40. Remember, it was beaten back in black and blue over the last 1 month or so. So Tata Motors could be a swing trade on the long side. We have a decent tick of green as far as markets are concerned. Nifty now 117 points higher. Will this be a dead cat bounce, or will markets move up? Only time will tell. But let's look at some other prices within the Nifty. I'm very keen to find out what Titan is doing, because it came out with a good set of business updates. 2.63% higher, 3766. Let's look at in the banking space at IndusInd Bank and Federal Bank and Bandhan Bank. These were three banks that came out with announcement as far as their businesses are concerned. Let's look at IndusInd Bank, 1.1% higher, 1398. Federal Bank kissing 200 rupees, 3.26% higher. And what is Bandhan doing? Bandhan, I don't have the price in front of me, but a 100-point uptick on the Nifty. Let's hope this does not result in a sell-off. Dharmenji, coming back to you, sir, any hope that you see from these three business updates that have come in from private sector banks, IndusInd, Bandhan and Federal, that the fears of money moving into mutual funds from time deposits was perhaps overblown?
Tell you, there's a catch to it. I mean, these banks are also into third-party distribution. So money moving from deposit to mutual fund is these banks' agents only. I mean, the people who are selling them to their clients to have a better yield. So I think because of so much, noise being made about this, and RBI being very proactive on this aspect, so some selling may not have happened this quarter, because suddenly you cannot have such a big deposit jump coming into play. And that has what has given to a rise in the deposit percentage for most of these financial companies. That is what our understanding is. And for the timing, it takes care of the arithmetic about credit deposit ratio. But the bigger challenge for all these banks and the NBFC would be, when they report their earnings, would be the net interest income growth. The NIMs, which I see a compression again coming back. Last quarter it was very less, it was 10-15%. This time you will see a greater compression in the NIMs, because the cost of funds have gone up and they were not able to pass on this cost of fund to their clients. Most of them were not able to do that. And the third aspect is the asset quality, where we see delinquencies may be on a higher note, slippages may be higher, and collection efficiency will come down from 98-99% to 96% is what we are working on. So that is the gray area, and let's see how the fine print is. But our hope, I mean, the expectation is it would be on a weaker note.
Okay, fair point. That is the view coming in on lenders. Titan, Dharmesh, what would be your view on Titan? Fantastic business update coming in. This is perhaps the bluest of blue companies from the Tata stable, and a 25% rise in sales, quarterly sales, and a 26% rise in jewelry sales. So both volume and value are back. Any view that you would have on Titan at about 3670?
So definitely a positive view, and this has largely to do with the cut in the custom duty from 15% to 6%, and 9% kind of a straightaway price advantage was there, and gold prices have been rising up. So all balanced out, and we are again walking into a festive season. Q3 is supposed to be the best quarter for Titan. So a positive sentiment built up would be there if you just ignore the valuations, which Titan already have enjoyed a premium valuation in any which ways. So there, I think the traction would be high in this all the jewelry space, particularly in Titan, going forward for next 2 3 months. And certainly, one thing more is there. Here, you have a business certainty and the numbers playing out in a volatile market. So it becomes also a risk-averse kind of a trade, a relative trade on Titan and other jewelers. So Titan remains the top pick out there. We are expecting 8 to 10% kind of an up move in next couple of months.
Okay, a detour into prices again. Let's look at NBCC. This is the 1:2 bonus announcement adjustment that has come into the picture. The counter is up 4.7% after the adjustment and is now at 118. Please keep an eye out on this one. What else is in the green? Lodha Developers, better known as Macrotech, 3.5% higher. Shriram Finance is showing signs of reversal. And of course, what are the cement counters doing? JK Lakshmi Cement, 2.5% higher, 800. Dharmeshji, cement was a classical contra buy. The official end to the monsoon, plus very, very juicy valuations relative to the market, got cement clicking back up again. Would you have a favorite via the Chola research team as far as the cement sector is concerned?
Actually, favorite remains Ambuja Cement out there with the Dalmia Bharat. And I do think a mix of volume and a slight uptick in the blended realization will have around 9 to 10% kind of a growth on the revenue front playing out for Q3 and Q4. And we have lost already, a larger part of Q2 because of excessive rain and larger part of Q1 because of excessive summer heat. So that catch up will happen in Q3 and Q4 as far as construction activity is concerned. And we are seeing that in fact in Mumbai, I can see construction activity picking up much faster than what it was say last 3 or 4 months. So cement companies are in a pink spot right now, and they are likely to see price traction going forward in all the companies, top pick being Ambuja and Dalmia Bharat.
Okay, Ambuja is something that we will track on your behalf. Dharmeshji, Cholamandalam Securities has come out with a research report on 20th of August in which 5 companies were highlighted. Let me just repeat for the benefit of viewers. Let's deal with the banks first. Canara Bank and of course Bank of India were among your 5 top picks. Do they still remain? And prices are lower from the point you had suggested.
Yes.
So have they become juicier still, or is this a time to reevaluate?
Essentially, I mean, when we came out with this report, clear mandate was there that it has to be done on a SIP basis. In this market, we find value out there. And because of market correction, things playing out, they have come a bit down. But yes, we are sticking by that, and we'd like to see the earnings update of these 2 companies. To my mind, if you look at the last quarter earnings, these were the 2 banks which were outlined in the basket where the deposit and trade growth both was in sync. At the same time, asset quality have improved. They were able to maintain their NIMs and the net interest income growth. So those parameters, I do think this quarter also they would be likely to be stable and a relative outperformer compared to others. And then when you look at the valuation, they become a good buy. So price action may follow, sooner or later, but value is there. And out of that basket also, we have actually come out with an initiating coverage on Narayana Hrudhale. That was a brief write-up report, and then we have a complete coverage on that. So there also, I think in this, I mean, any dip which you get, one should be buying into that company as well. It looks a very strong buy.
That was the next stock that I was coming for. Dharmeshji had at that point of time highlighted 5. We've discussed Bank of India, Canara Bank and Narayan Hirdale, and it remains on Infibeam and Natco Pharma. Natco, of course, hit a very strong record high. A bit of a correction there. So would you want to revisit Natco and Infibeam?
Yeah, both Infibeam has done the demerger part of their business, so now they are more focused on the core business in the Infibeam itself. So that remains a cash point out there, and they are rolling out many AI products, and they are sole vendor to Government of India on the GEMS part. So that the revenue and all will trickle in Q3 and Q4, and subsequently it will pick up speed. So that remains a good fundamental long-term buy. Natco Pharma did went up sharply after that, and then there has been some correction setting in. But again, if you look at the valuation metrics, it's the cheapest in that segment at all. I mean, a dominant player in the oncology segment, and at the same time available at one third of other pharma players. So pharma as a space, I think, will likely do well in Q3. Again, the backdrop is with the volatile market, people would be going to some risk averse trade, and there it looks a decent buy. So all those five plays stays as a SIP mode of investment, no deviation out there. And with Narayana, I think this Cayman Island, they have added 50 more beds, and that's a cash cow. 54% of the profit comes from there through the daycare kind of facility, and that's going to add up to their value, particularly in Q3 and Q4. So the profitability will go up far higher.
Okay. Vaishali Parekh joins us from Prabhudas Leeladhar. A very good morning to you, Vaishali, and a lick of green as far as the markets are concerned on Monday. What view on the Nifty? Will 25,000 hold for the bulls, or is this just a dead cat bounce? In the first 15-20 minutes, we resume sales. What is your gut feel?
Very good morning. Actually, the trend has definitely turned down, but having said that, currently Nifty and Bank Nifty are at a crucial support levels. So for now, I would just say it's a bounce. We'll have to wait and watch.
No worries. Any two stocks that you might feel may outperform the market on the long side or the short side? What are you looking at which looks good on the charts?
So I would say metal sector is still holding on well comparatively. So I would look at Jindal Steel and Power. I would look at JSW Steel. They are looking quite good. So I would focus right now on Jindal Steel and Power. I think this should give a good upside from here. And also Tata Chemicals, chemical sector. So
Wonderful.
Tata Chemical is doing well, and we are waiting for a confirmation for a breakout to take place. So I would say that Tata Chemical chartically also looks quite promising.
So there is a dovetail of information as far as the technicals and fundamentals are concerned, ladies and gentlemen. Dharmesh ji just 10 minutes ago mentioned Jindal Steel and Power and JSW Steel from the metal steel segment, which he preferred. And of course, there is a technical view on the strength coming in. Both JSW Steel and Jindal Steel are at record highs. Let me just give you a 1 year performance on the metal counters, and that will give you an idea as to how these two charts are performing. We'll wait for prices to sort of improve because we've just sort of closed the pre-open trade. I think metal will be available here. Let's look at year-to-date performance. Yes, I have it. Jindal Steel and Power 1026. It is up 37%. JSW Steel is up 18% in the past 9 months. Remember, the last 4 or 5 sessions have been induced into profit booking. So the year-to-date gains have been trimmed as well. Vaishali, before we get into pre-open opening trades, a very quick view on Titan based on very strong business updates that has come in. What are the charts telling you? Counter up 3%.
So yes, we have spoken about this stock very often, and I think, well, we saw a minor dip, but once again we are seeing a good opening right now. But I think this makes a good buying opportunity with 3550, 3600 as support. And once we see a clarity of the stock moving past 3900, I think this can give further higher levels also. So my view is positive to be bought at every dip, keeping in mind 3550 as a strong support.
Okay, ladies and gentlemen, we have the opening quotes in front of us. The Nifty's opened 90 points higher, in sync with what the GIFT Nifty was suggesting. Will this be a dead cat bounce? Only first 15 minutes will be telling us. A 300 point uptick on Nifty IT. Remember, TCS starts with earnings on Thursday. Nifty Bank 200 points higher, and the Nifty 500 0.5% higher. So far it's looking good. The advanced decline ratio on the NSE is 1273 to 403. Okay, this is good. We will just come back to prices. Now the first important thing is that all 10 index heavyweights except for HDFC Bank and Hindustan Unilever are in the green. So sentiment is okayish. Okay. HDFC Bank down 3.75 rupees. What is Reliance doing? It was thrashed terribly all of last week. Reliance at the moment is 11 rupees higher, 1170 higher, 2784. How about Infosys and TCS? These are the two stocks that will set the tone. Infosys 12 rupees 55 higher, and TCS at the moment 26 rupees higher. This is how the main index is at the moment. Very quickly, let's get into the NSE 500. Okay, Bombay Stock Exchange 2% higher, fresh record high. We just crossed beyond 4200. This is a counter that I have been tracking ceaselessly, and we will get Vaishali to comment on it shortly. Geo Financials is the second most active counter on the National Stock Exchange. This is interesting. 3% higher, 46.90. Amongst the top gainers in NSE 500 today are Techno Electric. I have no idea why. 5.4% higher, 1616. Lodha 3.2% higher. NBCC 3.7% higher. Newgen Software 4% higher. CDSL, this is interesting, 2.7% higher, 1412. Vaishali, before we get into deeper into clicking markets, your very quick view on Bombay Stock Exchange and CDL. Both of them are CDSL. Both of them are related to each other.
Of course. So Bombay Stock Exchange already ready to get into the new price territory. We would continue hold on this stock, and we would look at now a target of 4600 to 5000. So view is positive. Continue holding with the trading stop loss. And the other stock you mentioned is CDSL. Okay. So yes, likewise, CDSL makes a good buying opportunity.
Yes.
It's on a good support level. The previous low what we witnessed was 1348. From there on, we are seeing a good bounce. And I think, once we see the stock moving above 1430, this would get in a trend.
Okay. So remember, Bombay Stock Exchange holds 15 percentage point equity in CDSL. So both of them are in a way related to each other. Okay. Let's now get into the markets. Now a 100-point uptick on the Nifty. So far so good. We will wait for the first 1 hour to lapse so that you can get a sense. Remember, Friday was a very, very disappointing day. You saw Nifty climb all the way up to 25,400, and then there was a very, very heavy selling pressure that came into the pricing. Let's just look at some other interesting names that are now coming into the prices. Okay, Paytm 2% higher. Dharmeshji, has your opinion changed for the better as far as Paytm is concerned, or you would rather stay away?
We are staying away from Paytm altogether. I mean, the business has undergone dramatic changes, so let them stabilize first.
Okay, fair point. That's a sensible view coming in. And as I had pointed out, that cement will be in top shape. I think one of the blowout performers is coming in from Heidelberg Cement. Very, very high volume, already up 12%. Vaishali, how are you watching Heidelberg? This is both a price and a volume correction. I would imagine this is a record high on Heidelberg. What are the charts telling you?
Oh wow, terrific. Because weekly chart also coming out of the range, and I think if this sustains about 248
yes.
to 250 levels, we are getting further high towards 280. So yes, it's a very strong chart right now.
Okay. Remember 3 weeks ago I had started pointing out Prism Johnson from about 160 rupee levels, and that stock did pretty well. I think it's around 220 now, and the trend has now started on Heidelberg. Let us see how it goes, but interesting days ahead for metal counters. And from the side of Dharmeshji, we are tracking Ambuja Cement from that space. Record highs in this kind of a market. Okay, from the agrochemical space, it's BASF 6% higher. This is a very high ticket item, 86.95. Naukri, this is Info Edge. I have marked this yesterday as well. Record high, then a bit of profit booking, and of course Vijaya Diagnostics. We've already tracked BSE. Volume buzzers, NBCC we will not mark because it's a event-led thing. Okay, it's IT all the way. A 400-point rise on the index. And Dharmesh, first to you, what would be your best mid-cap IT stock?
As far as the mid-cap IT stock is concerned, I will still go with Tata Technologies and Genser Technologies. So those two pockets look, good. The numbers were, pretty well, and most to do with engineering, E&RD part of our IT space rather than the software space. So Birlasoft also qualifies in that. These are the three companies which we are looking at. We are avoiding large cap IT companies from the my perspective. Let the numbers come. I don't think. See, the commentary will be same. They will be hopeful with this rate cut coming to play, but major part will be post the US election, and whosoever comes to the president, what is their strategy going forward will determine the future course of action for most of the IT companies. But E&RD is where the action will be, and there we think Tata Technologies, Genser and Birlasoft remains the good buying pick.
Okay, fair point. That is the view coming in. And Vaishali, to you, I want you to have a look at Emphasis. This is a nice play when it comes to mid-cap IT space. Maybe a swing trade in the making, down 5 days, and a nice 3% uptick. Would you step in, or is it just too early?
I think it's a bit early. I'd rather go for LTI Mindtree. So Emphasis, if it comes above 2950 and it sustains, then I think it is holding some strength, and it can go towards 3050, 3100. But I do like LTI Mindtree at this level. If you see chartically, that's comparatively well placed.
Okay, let me just do some chart spotting with the help of Vaishali. Look at Senco Gold. This is something that I've been tracking for a while, and the good part from Titan is reflected very well on Senco. Now this is 8% higher last time I checked, 8.2% higher, 1509. Needless to say, this is a record high. Vaishali, what are the charts of Senco telling you? And Dharmeshji, if you have a view on Senco, please, first to you.
Really, I think it's more of a trading play with all the jewelers, as we discussed earlier. Our topic still remains Titan, and other we are not, dabbling into.
Okay. Okay. To you, Vaishali, rests the difficult job. Senco.
Well, it's very strong move right now. Also, we are seeing that it's absolutely a strong bullish candle. So I would say I think it is going towards 1620. That's how it is. But quite an overbought stock even in the weekly and daily chart. So I would not recommend a fresh buy, but yes, continue holding to those who are having it.
Okay. Now almost 7-10 minutes have lapsed in the markets. Let's look at the most active counter. Are there any changes? GeoFin. This is interesting, Vaishali. Let's look at the charts of GeoFin and get a sense. It's already done 227 crores. Okay. Well, you are better placed than me to give an idea on GeoFinance. A swing trade in the making, or should we stay away?
I think it's still in the process of higher bottom formation. So I would say that yes, as long as 335 levels are held on as support, this should show some bounce coming in. But well, for now it looks to be a very narrow range, 335 to 365. Let's see, the actual clarity and strength comes only about 365, 380 levels. So till then, I would take it as a trading strategy.
Okay. Dharmesh ji, any view on Geofin at 345? Does it represent maybe an entry, or would you stay away?
No, see, if you are looking at from 2-3 year kind of a horizon and you remain invested in this stock, so anything below 350, 400 is a right entry point. So it has to be spread over that. But this is more of a company where you need to stay invested for some time. At least 2 years you have to give it to this company, and then
Yes.
thereafter the valuation and all can come into play.
Okay. This is Vaishali for you. I'll request the PCR to fire the chart of Natco Pharma. So this is 4 plus 4, 8 plus 12, 16, 17. It's almost a reversal after 1 week, 1 month of consistent profit booking. Vaishali, just a background. Natco Pharma has been one of the mid-cap pharma picks from Dharmesh ji's stable, and when he mentioned it to us, the stock was somewhere in the vicinity of 1300, went all the way up to 1600. He retains his fundamental purchase idea on that one. But what are the charts now telling you? Is the worst over? We are somewhere around 7th August close.
I would think so, because seeing the long-term chart, it's very strong. The daily chart, we have seen a minor retracement, and I think this makes it a good buying opportunity, because 1340 would act as a very good support. So I would say it's a good buy strategy right now, and maybe in all likelihood it can go towards 1550 and 1600 again.
Okay, Dharmesh ji, a quick view on the Bombay Stock Exchange and of course CDSL. Last time you met us, and between then and now, the SEBI circular has come in to trim down volumes, number of weekly expiries, rise in index contracts, higher margins, yet BSE continues to sort of attract buyers and buyers and buyers and buyers. Is it at the cost of unlisted NSE? How are you looking at it?
Definitely, I mean, you pinned it down. It's basically of NSE IPO likely to hit the market soon. Things are getting cleared for that, and because of that, this activity is happening. And BSE anyways did not have much, derivative participation. The bulk of this volume activity used to happen on the NSE. And going forward, Shanji, I still believe that almost 15 to 17% kind of a CAGR compounding will happen for next 10 years on the volume front, whatever sizes you change. Because as the market grows and it becomes bigger, it becomes easier for big, hedge fund managers to enter into the country and play it out. So for hedge fund managers, it doesn't matter whether it's a contract size is 20 lakhs or 5 lakhs, because they do in bulk quantity, and that is where the maximum action happens. HNIs are the main, bulk lifters. So it's good for, the entire strategy is good, that marginal retail traders, they will not be entering into this kind of an activity, rather than they become more of investors. Volume wise, I don't think there will be much change going forward. Say 1 year down the line, the volumes will be higher than where we are right now.
Okay. Dharmesh ji, before we let you go, best wishes for your health as well. May 2024 give far better returns than what have come in so far. And of course, festive greetings. We hope the best comes to you, everybody at home, and of course the employees and customers of Cholamandalam Finance. Thank you for spending time with us.
Thank you so much. Thank you, Sanjay.
Ladies and gentlemen, 9:30. The first 15 minutes are upon us. The Nifty has given back 50% of what it rose. So it was up 104, 105 points. It's now up just 62, 63 points. Is this selling that is coming in? Only time will tell. But it looks a little, how should I say, difficult at this point of time for it to sort of 1 second, just let me run some screeners. Lots of interesting stocks are coming on my charts which can be marked by Vaishali. Heidelberg, we marked it at about 12-13 points higher. Now it's 15.6% higher at about 252. Needless to say, this is a record which is doing phenomenally well. What else can I mark which Vaishali can comment upon? Okay, Vaishali, this is an ETF which tracks the Chinese market from Nippon called Hang Seng ETF. About 409 rupees today, up about 4.5%. Would you analyze the charts for our viewers? Does it make sense now, although it's just shot up dramatically over the last 10 trading sessions or so? Hang Seng ETF for you.
I don't have it right now, but yes, we were watching it last week and I think it's already run up. So I would not really have a view right now.
Yes. Okay, let me just show this chart. I am sure we can have it seen on the screen. So Hang Seng ETF, which is promoted by Nippon Asset Management, is now at 409.58. I think this is a record high. Let me just see. Yes, this is a record high, and the previous record high was somewhere like 391, 398, and the interesting part is that in the last 2 weeks, it was at 288, and such is the ferocity of the move in Chinese markets that from a low of 288 we are now at a high of 409 in a span of 10-11 working sessions. What else is hitting new highs? So we have marked BSE, we have marked Heidelberg. Vaishali, BASF is a very high digit counter, but to my mind the finest agrochemicals company that India has seen at 85.79. How are you viewing the charts?
Yes, so it has been outperforming and it's given super returns. But well, monthly chart also shows highly overbought. So I would say partial profit booking should not be ruled out, or else continue holding with the trailing stop loss.
Okay, 933. Anything that you've observed? This is a slow but sure cut that is coming on the Nifty. Now just up 44 points. What is your view, and anything in terms of stocks that catch your attention on the long or the short side?
So I would say actually, well, IT index is comparatively showing strength, stock specific if we talk about persistent and so on. But well, I think the bias is more. I'm looking at, in fact, Mahindra & Mahindra has weakened its trend for now. So I would say, and we have recommended a sell. So if it breaks Friday's low 3009, I think this could give a further slide to around 40 to 50 rupees. So I would look at this for a sell strategy.
Okay. Mahindra & Mahindra, despite the phenomenal demand. Yeah, Vaishali, you were saying something?
Even Bank Nifty is losing its strength. So let's wait and watch. There isn't much to say.
Okay, I think an interesting trade would be to watch the 25,100 Nifty put. I'll keep that in mind. Let me just get hold of that before we welcome Mr. Amar Singh. Just a moment. So we are on 7th of October. Okay, 25,100 put, ladies and gentlemen, is at 161 rupees on the Nifty. We'll keep an eye out on this one. Let's see how it functions. Remember, it's down 56 rupees over Friday's close. Vaishali, I believe you have yet another important meeting which you will be attending. Thank you so much for your time, and of course we'll get back to you. Festive greetings, and here's wishing you the best for Navratri.
Thank you, and wish you the same.
Okay. Mr. Amar Singh, Senior Vice President for Research at Angel One, is with us. Namaste, Amarji. A very warm welcome to you, sir. Anything that catches your fancy in this kind of a market? Should we be on the back foot? Is this a sell on rise or buy the dip market? What are you advising your HNI clients?
Yeah, first of all, a very good morning and thank you for having me on the show. So if we look at the markets, see, markets were looking for some reason to correct, and we've seen that. And I would say the Middle East has definitely given a reason for that. But at the same time, if you look at the Chinese markets, they've performed exceedingly well post the underperformance. So having said that, there definitely are pockets of interest for investors wherein they can look at certain stocks. So IT is one sector one can keep a close watch on, because we'll be having the IT numbers also. The quarterly results coming out soon. So that's one. And the other interesting thing is that the US non-farm payrolls data which came in last week, that was expectedly better, far beyond expectations, because that came around 250K versus 132K or something. So that clearly says that now whether the US Fed is going to cut rates, one, and secondly whether the US is entering into recession anytime soon. So these are two, I would say, data points which will play a very important role in the global markets, and Middle East definitely is one of them. So having said that, I would say one can if we talk about sectors, we've been positive on pharma, we've been positive on IT, we've been positive on FMCG, and also the two-wheeler segment. Metals have also performed exceedingly well, and there is a possibility that metals could continue to perform well, because if you look at the Chinese stimulus packages which they've announced for this entire year so far, that's in excess of $1 trillion, the largest in terms of value in China. So that's one factor which is clearly playing on the markets. But at the same time, that has a flip side, that FIIs have been selling. So, but that I wouldn't read much into it. If it continues to sustain, maybe then that could have an impact. But these are some sectors which one can keep a close watch on. In terms of stocks, I would say Piramal Pharma, definitely I've been talking about it quite well for quite some time, from almost 150 odd levels. So this is one stock, again, any pullback is a buying opportunity from a long-term perspective.
Okay, so that's a nice small-sized count. I think last time I checked, Piramal Pharma was about 225, 230 range. Of course, it is consolidating at record highs, but this is a newly demerged business from Piramal Enterprises Limited. So shareholding is limited, and of course it's done phenomenally well. Got listed, I think, at 140, 150 rupees, then went all the way down to 70, 80 rupees. Now Piramal Pharma, PPL Pharma is a pick that Amarji is suggesting. A blowout happening on mid-cap pharma, Amar. Strong moves coming into Coforge at a record high. At 70 to 75 rupees a pop, is Coforge offering value, or are we just much too much ahead?
If you ask me about Coforge, honestly, there is still no signs of change in momentum, or decline in momentum is a better way to put it, and neither a trend in change for a trend change in Coforge. Because earlier Coforge, if we go back in February, it had made a high of almost 6,800 level, 68, 68.50. Then it took out that high in September first week, and currently it's around 72.50 odd levels. And if you look at the charts on the monthly, on the weekly charts, they continue to remain very strong. So effectively, it means that this is a stock showing no signs of, I would say, a trend change. So those who are long, they should definitely hold on to their position. From a short-term perspective, the stock has got good support coming around the I would say roughly around 6800 level, 6800 because earlier that was the top. So 6800, 6900, that's a very strong support zone for the stock. I wouldn't recommend fresh buying despite the stock rallying but the trend is up. So those who are long, they should definitely keep on to their positions in this particular stock.
Okay, Nifty IT, we've just discussed Coforge, is the one which is saving the Nifty. Now up 500 points, ladies and gentlemen. Let me just see what is the contributory factor as far as Nifty IT is concerned. We've just discussed Emphasis and Coforge. This is doing pretty well. But within the index, let us see what is the contribution coming in and which are the stocks in the IT space that are doing pretty well. Let me just, it takes a while. Yes, here it is. Okay, refresh. Okay, top contribution is coming in from Infosys. Of the 500 points that you see in the green as far as Nifty IT is concerned, 222 have been given by Infosys, 117 points by TCS, 51 points by HCL Tech, and L&T Mindtree 42 points. Amarji, the earnings are upon us, starting with TCS. What would be your favorite counters amongst large caps in IT, and what are your expectations from this sector?
So if you look at the IT, IT has really, as you rightly said, it has been holding quite firm. And also the jobs data which has come out from the US, that clearly shows that US isn't really slipping into recession, because that was a fear, and that still is a fear. I wouldn't say it has completely vanished, but that gives some strength to the IT companies, and that is what we are witnessing, be it Infosys for that matter, so Infosys is one stock continues to remain very strong on the long-term charts, on the intermediate term trend. However, having said that, Infosys on the upside has got resistance around the 1970, 1980 zone. But if it sustains above that level, then it is headed significantly higher towards the 2100 odd levels. On the downside, it has got Infosys has got good support coming around the 1880 levels. So amongst the large cap, this is one stock one can definitely keep a close watch on. Some of the IT stocks have corrected, like L&T Technology. We've seen some correction. Then if you look at Persistent, again, Persistent is strong on the charts, but on the daily charts, we are seeing some sort of consolidation. TCS has corrected and is trying to form a bottom. So it is trying to form a base. Very strong support around the 4200 level. So ideally, any pullback towards those levels is a buying opportunity. We have the results. So it would be, the stock is going to be volatile. Sustaining above the 4350, 4400 level, then you can expect some rally in the stock. Otherwise, the stock would go in for consolidation. However, the long-term trend for most of the IT stocks continues to remain strong and positive. So I would say keep a close watch on Infosys with the levels that I've spoken about.
Okay. While Amarji is with us, let me just point out some volume changes that are happening for the better. NetWeb Technologies. This is something that we rarely discuss, but it was an IPO that we marked at Business Today. It has done phenomenally well from then on. 4.5% higher, 26.25. This is the play for setting up data centers, for setting up back-end offices by multinationals. This company is into hardware, and it designs specific supercomputers for your computing need. 4.5% higher, about 74% of 5-day average has been traded. What else is moving in the green? You have Natco Pharma that we've discussed, now 3.2% higher at about 1401. JK Lakshmi Cement 3.2% higher, 805. And today's top stock performer is Heidelberg Cement, 15-17% higher. Now a bit of a profit booking happening on this one. Amarji, what would be Angel One's top mid-cap cement pick?
So if we look at the cement stocks, See, cement, we've seen some significant up move in cement stocks. So we have been earlier positive on, I would say, Ultratech, but it's more from a large cap perspective. We are seeing some sort of consolidation there in the cement space. So cement, if you ask me, I would say we've been slightly positive there in the cement space right now. But at the current levels, we are saying that you need to be slight cautious, because if I look at the cement stocks, Ramco is one stock which we have been looking at quite closely. So if you look at Ramco, it has witnessed some rally currently around 850, 860 odd levels. But again, till the time we don't see it sustaining above the 880 levels, it could be in for consolidation. But this is one stock on any pullback or on any decent correction, one can look at an opportunity.
Okay, so Ambuja is something that another friend of ours just 15-20 minutes ago had suggested, and again a stamp of approval now coming in from Amar. The pharma space, Amarji, is doing phenomenally well today. Lupin 2209.5% higher. Divi is taking it away, record high 1.7% higher at 55.19. And we also have stocks like Natco doing pretty well. Any views in the pharma space? What would be your mid-cap favorite from the pharma space?
So if you look at pharma, I'll talk about most of them. We've seen, for example, Alchem is one stock which has been very strong on the charts, has delivered superior returns. But currently we are seeing some sort of consolidation. So where we could witness some sort of correction. Aurobindo Pharma, another one very strong on the charts on the long term. But in intermediate term trend, we are seeing some sort of correction towards towards 1300, 40, 50. That can be a good level for entry. Currently, it's around 1485. Biocon, again, we are seeing some sort of consolidation. I wouldn't recommend Biocon because it's unable to breach the 380, 400 levels on the upside. But it's approaching a very crucial support zone. So Biocon one can keep a close watch on towards the 325, 330 levels. There one can expect a pullback in Biocon. And apart from that, if I look at Cipla, again, very range play. In most of the pharma stocks, we are seeing some sort of consolidation. DV Laboratory is one exception. It's very strong on the charts, on the long term, on the intermediate term trend. However, 55, 50, 55, 60 is a zone of resistance. If that is taken out, the stock could rally towards the 56, 50 odd level. So we could expect a 4-5% rally from those levels. It is very strongly supported around the 5300 zone. Very strong. If I've looked at all the pharma stocks, DVs continues to remain one of the strongest on the charts, technically on the charts. Otherwise, Dr. Reddy's, if I speak about, again, witnessing a consolidation. If I look at Gland, again, selling pressure, Glenmark, again, strong on the charts, but more or less consolidation. So in pharma space, what we are witnessing is that most of the pharma stocks are currently witnessing profit booking after the spectacular rally, and they have gone in for consolidation, like most of the IT stocks.
Okay, ladies and gentlemen, as it was feared, has happened. Nifty is now at its almost day's low, and it is looking ominous. The gap has been filled. It opened with an 80-90 point gap that has been filled. 25,036. I had obliquely mentioned that you need to look at the 25,100 Nifty put, which is we marked at about 161, 158. Very quickly we'll see what is that in terms of price. Now 178 rupees in front of you, still down 38 rupees, but remember it was down 54 rupees. So an uptick in price, and if 25,000 breaks, then you will see an acceleration in 25,100 put. Only time will tell, but 950, and it's getting red across the board. The NSE 500 index is already given up all its early morning gains and is now 54 points lower. The bank Nifty is in the red. The advanced decline ratio is negative. 600 shares, 640 shares in the green, 1650 shares in the red. We track 19 indices for you. Out of 19, just 5 are in the green, and the losses are led by the small cap index, the Nifty Alpha 50, which is the most aggressive index amongst mid caps, and of course the metals index about 3/4% lower. For the moment, 25,000 seems to be holding, but the selling pressure across the board, all I see is red everywhere, is now getting stronger and stronger. Given the strength, Amarji, that we are seeing in crude oil prices, what would be a better bet, ONGC or Oil India?
So if you look at these stocks, ONGC, we are seeing some sort of consolidation. It's really a lack of trend in ONGC. Long-term trend is positive, but intermediate term trend we are not seeing. The same I would say of Oil India as well. So it's more of a range play for these particular stocks like Oil India. Oil has got good support coming around. The current levels are very good support. 540 is a good support for Oil India, but again on the upside seems to be capped around the 600. If I look at ONGC in particular, ONGC chart patterns are similar to Oil India. Again on the upside, ONGC needs to sustain above the 300 for any rally. On the downside, it has got good support somewhere around the 280. So it's 280, 300 for ONGC. So till the time we don't see it rally above that level, I would say both of these stocks are in for consolidation.
Okay, we have the F&O markets to look into. Remember, it is also the expiry of the mid cap select Nifty today, the weekly expiry, and amongst the top losers are Vodafone Idea down 6.5%. Federal Bank, this is a surprise because the business update was pretty good. The counter has slipped dramatically, 3.5% higher at 188.3 in futures. You have UPL down about 1%, Ashok Leyland around 200-day DMA slipping, and of course Voltas down a bit. Vese, in terms of the broader markets, Titan, rather surprising, a very strong show in terms of business updates, but 2.5% lower. Remember, it had started 3% higher, so the swing is 5.8, which is worrisome. Profit booking in Hindustan Copper down 2.7%, Exide down 2.2%, and that is how the markets are moving. Amarji, anything that catches your attention?
So if you look at some of the stocks, JK Paper is one stock one can keep a close watch on. It did rally. We witnessed some sharp rally in the stock last week, but it needs, for any further meaningful rally, the stock needs to trade above the 510 level. So that's a level one should keep a close watch on, because trading above the 510 level, the stock could witness anywhere between 8 to 10% rally in the stock. So that's a level to watch out for. Breakout above that level can be an opportunity, because the stock has got good support below the 480 level. So that's a level to watch out for JK Paper.
Okay, let's look at where profit booking is at its peak. Okay, any names that I would like to mark? Mostly I avoid these names on air. But yes, Triveni Sugar 5.6% lower, 435. Deepak Fertilizers, bit of profit booking, 5% higher. Remember, this counter was at a record high, 1032. You have PC Jewelers slipping 5% lower at 150.7, and Jubilant Ingravia 5.6% lower at 749. These are the stocks which should be marked on air. There is another company called PG Electroplast from the electronic manufacturing space. Remember, this may be down 7% today, but this is a 5-to-1 stock split. Now the counter is somewhere like 3500, but slippage is coming into PG Electroplast. Anything that I'd like to mark on the all-time high space, we've discussed BSE, Coforge and BASF already. Hang Seng Bs are up 5%. This is a ETF, so nothing much can be done. Okay, we'll let that be as far as prices are concerned. Tenwala Chemicals, 20% higher. Normally I don't mark this price, but a 21% uptick in this kind of a market requires attention, and that too also on a blowout of volume. 75,000 shares have been traded, which is the highest in the last 3 odd months, and of course a 20% uptick. Amarji, do you track Tenwala Chemicals?
Actually, I really don't track this stock, so I'll not be able to comment on that.
No issues, no issues. No issues. Absolutely no issues, sir. I just marked it because it was a 20% uptick, and therefore it just caught my attention, and the volume was also pretty good. Okay, new lows. Let's see what are the new lows that are there in the market. Of course, Idea Cellular, 6% lower at 9.21 rupees. There is selling pressure that is being seen on Fusion Microfinance. Remember, this was a company that took a 500 crore rupee hit on its balance sheet because of micro loans going bad, down 2%. Anything that catches my attention, TNPL, Tamil Nadu Newsprint, 1% lower at 205. That's it is, ladies and gentlemen. Let's start wrapping up the market. 9:57. Amar, before we let you go, what would be your thoughts as far as markets are concerned, and any positives that you see, any negatives that you would like to highlight for medium term watchers?
So if you look at the markets, the markets were ripe for a correction, and there was a valid, I would say, a reason for the correction as well. But at the same time, I would say, if you look at the long-term trend, the long-term trend continues to be very strong for Nifty. On the intermediate-term trend, yeah, we are seeing some sort of consolidation. So sustaining below the 25,000 mark, that's a psychological level. So we could witness some further correction. On the downside, I would say 24,700, 24,800, that's a zone of immediate zone of support for Nifty, where we could witness some very good support. On the upside, immediate zone of resistance is a 25,300, 400 zone. That's a zone of resistance. Some of the positive triggers would be how the ITs, because we got the quarterly earnings, so how they really play out. That's one. Secondly, crude oil prices, because crude oil prices haven't really rallied significantly. Brent trading below the 80 mark. So that tells that maybe the Middle East crisis is likely to be not likely to escalate. So that's one positive thing, and also some positive data points from the US have been overall a positive trigger. So I would say that the correction was there, but only 2 stocks to watch out for. If HDFC Bank starts trading below 1600 levels, then that could be a cause of concern. Ideally, it shouldn't reach that level. That's a major zone of support. So not much to worry. And also India VIX is within control. So it's somewhere around 14. Did witness almost 18% rally or 18% rally last week. But currently it's around the 14 mark. So that's not much of a concern. So investors also clearly have taken this correction into a stride, which was 4.5% last week. But yes, stock specific, one needs to be definitely on alert and watch out for in the coming days.
Your final view on the RBI credit policy, which should be upon us 2 days later. What do you think the RBI will do? Hold?
See, the possibility of RBI holding is is higher. But the US Fed has definitely set a benchmark in terms of the rate cut which came in, which was expected of around 25 basis points, but some were also expecting 50 basis points. So that shows that yes, going forward, what the RBI does would also be a factor of inflationary concerns, because that's where the RBI is likely to take I would say a firm stance on as to how inflation really plays out in the coming weeks. Because in case we see a spike in energy prices, crude oil prices, so that could have some impact. But this time it's more or less stated to be status quo. It would be a pleasant surprise if there's a rate cut, but we'll have to watch out for that.
Well, let's hope there is a rate cut, but the overwhelming hope is that the Reserve Bank of India, in its busy season credit policy, will hold rates as it has been doing since April 2023, when it pivoted from keeping rates stable from the hikes that it was showing. So from 2023 April, you've seen a one-sided rally which has taken the index all the way up to 27,250, and it is here that the profit booking started coming in. With that, ladies and gentlemen, we'll thank Amar for his wonderful conversation over the last 25 minutes. Amar, festive greetings to you and everybody at office, along with all the clients that Angel One has, and everybody at home as well. Have a nice day, and of course beneficial trading.
Yeah, thank you, and I wish you and your viewers also a very happy Navratri.
With that, ladies and gentlemen, we'll pause for a moment as far as live coverage is concerned. The Nifty in the green, 31 points higher. The Nifty 500, which is the broadest and the most sensible measure to track, is back in the red, down 100 points. It's the IT index which is holding forth with TCS, Infosys, Emphasis, the likes of Coforge, L&T, Mindtree, boosting sentiment on the Wall Street, but it's more or less a sell on rise as far as markets are concerned. Let us see how long 25,000 holds, but remain glued to Business Today Television. There's lots happening on the other side of the break. Welcome to our special episode of Daily Calls, where we help you navigate the markets on a regular intraday basis. I am Shail Bhatnagar. You are joining Market Today Television, and with me is Mr. Raghavendra Singh, who will help us look at our viewer queries. Namaste Raghavendra ji, swagat hai aapka. A very nice reaction in the market after 4 continuous days of fall. The Nifty is now back 176 points higher. 25,400 is back with the bulls. Do you think the worst is over in the market, or this could be a dead cat bounce?